So, in this episode of Crypto Wednesday, we're going to talk about building a strategy that loses money most of the time and just have a little bit of an honest conversation of that I'm trying to deal with myself of whether or not I should include it in the strategies that are going from here. So, if you're new to this series, on Wednesday, we talk about these kind of crypto strategies that I've been tinkering with and building with the ultimate goal of these will be part of StatsEdge trading. So if you're at all interested, right, go to StatsEdgeTrading.com. The idea is that we have a bunch of strategies that are doing just fine in the equity market. And although I'm not abandoning those, I'm certainly looking to always build new strategies in all markets. I thought it might be prudent to take a little bit of time each week and branch out into the crypto markets because of their uncorrelated nature that is getting more and more uncorrelated to the equity markets. So there's a world in which, equities, the trading isn't doing that well, which happens with all strategies, but then crypto trading is doing phenomenally. And I built one strategy, which is a mean reversion strategy. It looks pretty good. I'm going to start pushing that out to StatsEdge Pro members very soon as kind of like a beta test. And then from there, I want to build more strategies because my whole synopsis on trading is there's no strategy that works all the time. So I want to make a lot of strategies. And this particular idea is one that is kind of interesting. And we can look here with the equity curve. You can see this is the equity curve for the strategy, in which most cases we sell off here and do almost nothing for most of the year. And then in 2023, we had this huge spike higher. And then nothing for an entire year, and then a huge spike higher. This has happened enough times that it's interesting to me. So what is kind of the crux of this strategy? If we go into the trade list, and let's just grab something here. Let's actually just do one that works so we can look at that a little bit. And yeah, here's one, APHUUSD. So this is call it a kind of a typical bull flag kind of strategy. So a big push up in this crypto and then a sideways chop for a long period of time. We buy the breakout with a very tight stop. And then we're trailing using a very short-term moving average. That's a daily chart. And these are one of those like huge gains that kind of, this one went from what we entered around 4 and we exited around 15. So that's like a triple of your money on this particular trade. But because the stop is very, very tight, in most scenarios, we are getting stopped out of a lot of these positions. So that creates this equity curve that looks like this. Now, the reason that I would be or that I'm thinking about whether or not I want to include it is not because of the strategy. It's a strategy that I would run myself. It's very straightforward. There's been really no optimization put on this at all. I'm going to try that a little bit later to see if there's something that unlocks there. But in its base form, it's okay. And the question is more whether or not you would be able to trade it. And I think that's a question you always need to ask, and kind of the crux of this video. And the reason I decided to turn on the camera is because you could build a strategy that does very well. However, if you can't stick to it, that's going to be a problem. So this is one of those that, yes, the strategy does perform very well in the long run, but will you be able to stick to it? And the way I think about it is that if this was my only strategy, no way. There's no way I'm making some money here in April. And then from there until November, December, nothing happens. And then in January, I make some money. And then literally for the rest of the year, I'm giving back small chunks of money. There's just no way that I would be able to do it. However, if you combine that strategy here with show all, right? So this is the strategy we were looking at before, the mean reversion strategy. And this one's a little bit more active and a little bit more consistent. But the fact that you're trading this mean reversion strategy and it's doing okay, and then every now and then you get this surge of profit from the other strategy, I look at this more of this strategy is costing me a very small amount of money from the profits that this strategy is making in return for every now and then you do really, really well. So I'm inclined to include this. I think we could have a chat about this below. Would you trade a strategy in which the equity curve looked like this, in which, for long periods of time, you're slowly giving back money as you're trying to buy a breakout and it's failing and over again, knowing that once a year, once every 2 years, you end up making a whole bunch of money? This is the difference between systematic and discretionary traders, I think, held true. If someone was discretionarily trading this strategy, I don't think there's any shot in the world that they would be able to perform this over time and just continue to come in and hit the button over and over and over again. However, bring this in here. However, if you are able to take it and look at the strategy, not like this, but look at the strategy more like this, where it's a portfolio of strategies, I think that becomes a lot more interesting. And this is why I'm all about stacking these different strategies together, because alone, I don't know if I'd be able to, but combined with everything else, I really think I'd have a shot here. Now, again, if you're just interested, if you're someone out there who's not trading systematically right now, you don't have a plan for your trading, you're just coming in every day and doing a little bit of research and hoping you're buying a stock that comes up, go to StatsEdgeTrading.com. Again, systematic trading does not mean we just make money all the time and we're right on all the trades. But when I take a trade, I know. And I take a trade, we took the Monday video, if you watch that. We took that trade on Monday, it stopped out on Tuesday. It just happens. I know that in that strategy, I will be wrong on most of my trades. So the idea is that it doesn't become a magic formula to make a bunch of money, but mentally it becomes amazing because you just know that every day you're going to know exactly what it is that you're going to do. If the stock hits the level that the strategy says you should take a trade, you take a trade and you shut off all the media and you shut off all the scanners and you shut off all the noise and you just focus on that one thing. And mentally for me, it's been absolutely amazing. And if you want to give it a try, again, go on over to StatsEdgeTrading.com.